All right, we had a big beat yesterday by Google, but the chip stocks are disappointing this morning. 30 minutes until the start of trading. I'm Matt Miller.
I'm Sonali Basak.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
And coming up, Alphabet's AI bet starting to pay off, but AMD delivers a disappointing forecast. Next up, Microsoft and Meta take the earnings spotlight.
A shocking miss from Eli Lilly, the drug maker lowering its guidance because of lackluster sales of its blockbuster weight loss drugs.
And amid this earnings rush, investors also wading through a raft of fresh economic data. The U.S. economy expanded in the third quarter, powered by a resilient consumer spending, a big beat there. All of that and more coming up. Let's take a look at where markets are trading 30 minutes until the bells ring. Pretty quiet. You have a real tug of war going on underneath the surface. Of course, that beat by Alphabet, but a miss by AMD, at least how investors are receiving it. The S&P 500 down about 0.1%. The NASDAQ 100, this was your big surprise winner yesterday, rising nearly 1%. You wouldn't know it looking at the trade today, currently off by about 0.1%. The bond market pretty quiet, of course, waiting through that economic data as investors are. You had those ADP figures coming in really strong, GDP strong as well, and PCE as well. Put it all together, actually, yields rising a little bit to unchanged territory. Camped out about 4.25% on your 10-year yield, Matt.
All right, well, economic growth looks strong, especially if you look at the labor market right now. This is ADP, and of course, it's hard to directly correlate that to non-farm payrolls, but the beat was more than twice what was expected by our survey of economists. So the U.S. economy continues to add jobs, and those workers continue to spend money, but maybe not on Zepbound?
Not on everything. Very excited to talk about that push-pull between the economic data and the stocks to watch. Eli Lilly now down more than 10% pre-market. Remember, it lowered its full-year guidance after sales of Zepbound, like Matt was saying, they fell short of expectations. The company blames it on inventory issues. Also looking at a bellwether here, Caterpillar down almost 3% pre-market. Third quarter profit on weakening demand in construction around the world. Really disappointed there. You're seeing it down about 2.8% pre-market. Alphabet, that's your bright spot. 6% higher in pre-market, seeing growth in search and cloud businesses as bets on AI begin to pay off. Matt, it really raises the question here if the Mag 7 are the safe haven, the place to hide. Finally, real quickly, single stock story, we're going to take a look at Super Micro because it says that Ernst & Young, its auditor, resigns amid a review. EY had communicated several concerns about several matters related to governance, transparency, and completeness of communications in July. Supermicro now down more than 30%. This is a stock also fighting off a short seller report, Matt.
I will say, although I know it's not proper Spanish, that's no bueno, honestly, when your auditor resigns, and no wonder the shares are selling off. We had a couple of other misses. AMD was a miss on revenue, but we were looking for $7.55 billion. They came out with $7.50 billion. I feel like it's pretty close.
The company also said that it now expects to get more than $5 billion in sales from its AI accelerators. They actually raised that from their previous forecast. It just wasn't enough. You have sky-high expectations for these chip makers, these chip designers. As we've learned, Google, though, Alphabet, actually, you're seeing those AI investments pay off. A totally different story from what we were talking about 3 months ago.
And, you know, it's interesting. I know that the focus will be mostly on the Mag 7, like you're talking about. You also earlier this morning pointed out Caterpillar. My eyes are on it, too, because you had great economic data, but you have a tough signal in a bellwether stock here, missing expectations.
Reddit, by the way, set to hit a record high in today's trade.
Social media in general. Yeah. Snap is also doing well, really sets the stage nicely for Meta after the bell.
Because I think, and we can get Mandeep's take on this in just a moment, I think that these AI large language models are scraping Reddit data, and maybe Snap as well. I don't know how to use that.
I'm sure Reddit would love that.
Let's dig into these tech moves with Bloomberg Intelligence senior analyst Mandeep Singh. He joins us here on set. He knows everything about these companies, and we'll start, obviously, with Alphabet, parent of Google. Revenue up 16%, and the cloud is really Google's cloud business is taking business away from Microsoft and Amazon's cloud business, right?
Yeah, I mean, it's 2 out of 2 for Mag 7. So we had Tesla and now Alphabet. And look, with Alphabet, I think you're seeing not just cloud, but also search. I mean, think about it, $200 billion run rate business growing at double digits. And also, they're deploying Gen AI at scale. No one else in the consumer arena is deploying generative AI the way Google is. They rolled out AI overviews to over 1 billion users. So that just goes to show how they are doing it successfully without any impact to margins. In fact, the big beat was on the margin side. So all in all, it was a great quarter. I think that they were under a lot of pressure because everyone thought they are losing share in search. They proved the naysayers wrong.
Who would be taking share in search? What else do you do besides
Bing,
Google something?
Microsoft's
really?
Bing,
Okay.
with that big NVIDIA
Rock
investment. Yeah, the narrative was there, but another narrative that's interesting this morning is basically hardware versus software. When it comes to AI, hardware has been in charge in the stock market, but today you're sort of seeing the reverse dynamic, of course, with Alphabet and with AMD.
Yeah, so Alphabet had their new CFO for the first time, and she said she's going to focus on costs. So she kept the CapEx in line with consensus, no major CapEx increases. So that was nice. And also, I think with AMD, the problem is they keep touting how big the data center market is. But when you compare them to NVIDIA, which will print, $30 billion in data center revenue, that number doesn't sound like they're catching up when it comes to this CapEx wave. And that's where I think there are some skeptics around how big AMD will get when it comes to, participating in this Gen AI chip wave.
It's interesting. If I don't ask you about Snap and Reddit, I think Matt would be very upset at me.
I want to know, right?
I think I do too. And so at the end of the day, Snap is actually doing quite well in the pre-market trade, up about 5%. I can see it right now. What's driving it forward?
I mean, with Snap, it's all relative to expectations, and their ad business grew 10%. When I look at Google growing, 13% in core ads, which is 20 times, 30 times bigger in magnitude, it's not a great print, but relative to expectations, they did well. And Reddit, I mean, as you were calling out, clearly their corpus that they have is quite, something that everyone wants to deploy.
When you say corpus, this is a word I heard yesterday, analysts throwing around. That's Latin for body. What are you talking about?
Well, it's the data set that they have, which they are selling to these companies, whether it's OpenAI, whether it's Google, Anthropic. Everyone is training their large language models on the data corpus. And that's what it comes down to when it comes to training these models. And training is not a one and done thing. You have to keep training these models again with fresh data. So think of Reddit as the place where the content gets curated, and then these companies train on that data, and they're selling their data right now.
I feel like there has to be a less creepy word than corpus, but we'll work on this.
Yeah.
You and I, we'll work on this. Mandeep Singh, it's great to see you, of course. Mandeep Singh of Bloomberg Intelligence. And let's broaden out this conversation now with Truist Co-CIO and Chief Market Strategist Keith Lerner joining us now. Keith, it's great to have you. We are in the thick of it when it comes to earnings. And it's interesting, we're talking about a big beat on Google, of course, Alphabet, and then you take a look at the disappointment in AMD. You added together the S&P 500 pretty much unchanged this morning. When you look at the sea of earnings we've had so far and the push-pull relative to expectations, where does that leave you?
Yeah, well, first, great to be with you all. We are in the middle of earnings, but the next 2 weeks is almost like a Super Bowl, right? We have the earnings, we have the employment report, we have the election, we have the FOMC meeting, we have China stimulus news. So it's really going to be a jam-packed few weeks. On the earnings side, overall, we are seeing some divergences, especially as you mentioned in tech. But I think all in all, what we focus on is the forward earning estimates for the S&P. And as there's been, movement back and forth among the economic data on what people's views of the Fed is, forward earning estimates have climbed all year long, and just this week have made another 52-week high. So I think the underlying story for earnings is still positive. But what we are seeing, the nuance is that you are seeing things where there's more divergence, even within semiconductors, as you mentioned, where where companies are more leveraged to AI. You're seeing that side of the business really strong, and other areas which may be more globally leveraged, maybe a little bit less strong.
I noticed that, things are priced to perfection, right? AMD barely missed on revenue, $7.5 billion instead of the $7.55 billion we were expecting. And as Katie pointed out, they raised their forecast for their AI chips, but the market still was disappointed. I think they were trading at like 90 times or 120 times earnings, as opposed to the 60 times where we see NVIDIA. Are you worried that these prices are a little frothy, Keith?
But by most historical metrics, valuations are somewhat rich. But I would say, as I look at the broader market, and especially technology, the technology sector as a whole, the earnings strength, the earnings momentum is still stronger than the overall market. So yes, valuations are high, nothing like the technology bubble as we look back, even though there may be select cases. But as long as those earnings in aggregate continue to move higher, I think tech is still a good place to be. And to broaden this out a little bit too, our view, we upgraded tech in August on the pullback. And our thesis is that the bull market is still intact, right? The way the evidence in our work suggests that the bull market is intact. The theme of this bull market is still AI and technology. And if you think the bull market is intact, I think you have to believe the AI theme is still also intact. And we do, supported by those earnings and some of those secular trends. But it's becoming a bit more divergent underneath the surface at this point.
So AMD, Sonali, is actually trading right now at 140 times last year's earnings compared to 66 for NVIDIA. If you look at estimated earnings, they're both trading about 50 times.
Fascinating. I will be watching the Philadelphia Semiconductor Index today as it trades. But, it's interesting. I want to move away from tech for just a second. We have Nick Colas from DataTrek on this program a little later. I can cite him today a lot. I guess he's on with us today.
Yeah.
He says something interesting about this unproductive tug of war between cyclicals and defensive stocks that makes it difficult to find the equal weight S&P reliable. So the broadening trade outside the Mag 7, are we going to walk out of this earnings season and say Mag 7 is safety, everything else is, like he says, unproductive?
Yeah. Well, first, I know Nick, and he does a great job. Really respect his work. As far as, I don't know that's unproductive. We prefer the market cap relative to the equal weight. The equal weight from a portfolio context does provide some diversification because you're not so concentrated. But the reality is the earnings growth, what we just talked about, are still in these Mag 7. That's where the majority of the earnings growth for this market has been. So that's why we still, on a relative basis, prefer the market cap the market cap index. I will say, though, we are overweight tech. We are also overweight financials, right? Financials have a bigger weight in the equal weight index. Financials just made a new high over the last week. Relative prices have been improving. And if the economy stays resilient, which it has been, and we've seen that today with the ADP report, credit should remain relatively firm. Hopefully, we'll see a little bit of a pickup in M&A. So, and the consumer is still very healthy. So all in all, I would say, yes, stick with the S&P, but are there opportunities beyond tech? Our answer is yes.
Keith, great having you on the program. Love to get you back in the studio. Keith Lerner there from Truist down in Hotlanta right now. We'd love to get you back up here in New York. Coming up, we're going to talk about drugs. Eli Lilly shares are down bigly as Zepbound revenue falls short of expectations. No, wait. Is that the intraday trade from yesterday?
That is. We have the same.
No, we should look at the pre-market trade from today. Eli Lilly currently
down 11%.
Thank you very much. This is Bloomberg. Let's get to high interest now. Look at what's making headlines around the world. UBS posted a surge in third quarter profit that beat expectations. The bank now has delivered 3 profitable quarters. The CEO, Sergio Armati, did warn about looming risks. He sat down with Bloomberg's Francine Lacroix.
The markets are pricing rather a Trump victory, and think that if this is confirmed, it remains to be seen is a classical sell-on news event, or how he wins will be also determining, is he in control of the Congress. If Kamala Harris wins, of course, some of the trades that are ongoing for Trump will probably have to be reconsidered, and therefore they're going to create rotations in the market.
Meanwhile, slightly north, Volkswagen's profit plunges. The automaker's operating margin shrank to the lowest since the pandemic. forcing the car maker to idle production and shutter showrooms. VW is looking to reduce wages for around 140,000 workers in Germany by 10%. That adds to the woes of an already weak economy there, although it didn't fall into a recession. An estimated 12% of Japan's population is tuning into the first World Series for baseball star Shohei Ohtani. But one group is missing out. Traders in Tokyo are banned from accessing their mobile phones due to compliance rules while they're at work, forcing them to check the news on the terminal or wait until they get home. Ohtani's Dodgers lead the series against the Yankees now 3-1 after the Yanks won last night. Sonali?
If I were them, I would definitely check the score on the terminal, Matt. Anyways, one stock we're watching this morning is pharma giant Eli Lilly. The stock plunging pre-market after lowering full-year sales guidance by $600 million. The cut spurred by disappointing sales of its weight loss drugs, which the company blamed on inventory issues. Here with more is Bloomberg Health reporter Madison Muller, covers this company and the entire industry very closely. And it wasn't just Zepbound, it was also Mounjaro. What's going on?
Yeah, so, I mean, analysts were shocked this morning. I think investors, too, clearly, from what we're seeing with the stock reaction. And we were all really surprised, too. I mean, we have seen Lilly consistently beat estimates. Zepbound sales have soared since the drug launched in November. And what we're sort of trying to figure out this morning is what's going on with this inventory issue. The company said that this isn't a result of weaker demand. It's more that inventory channels were selling less of the drug, so that those inventory channels decreased this quarter. I spoke with CEO Dave Ricks this morning, and he again reiterated that this is an issue with like retailers and wholesalers, and that they are keeping less supply of the drug on hand at a time compared to other medications, just keeping lower levels, and that's sort of what's happening. But I think analysts are still a bit confused and will be looking for more information on the call later this morning.
Yeah, I mean, the inventory story was kind of shocking because the narrative up until this point was that there's a shortage of these drugs. They can't make them fast enough. And Eli Lilly in particular has spent $10 to $15 billion in the recent past just to boost that capacity. And it's strange that it switched so quickly.
Yeah, and Lilly is saying that they are planning to make more of these drugs in the fourth quarter, and that they're on track to meet or exceed their goals that they set at the beginning of the year to increase production capacity by 50%. So they are making more of these drugs. They're not considered to be in shortage anymore. And so the question is really, what is dragging down sales? Is it this inventory? Is it actually weaker demand? Some analysts now questioning this morning whether compounded, these knockoff cheaper drugs are actually eating into Lilly's sales, which is something that, you know, before was not really on their minds. They were like, there's no way. And Lilly's still saying they're selling as much of these drugs as they can possibly make.
Well,
but
I mean, I have been trying to get these drugs.
Some on-the-ground reporting.
Yeah, my doctor tries to help me, you know, make the right pitch to the insurance company. The insurance company says no. I try a few more times. I'm back at square one, and then I'm thinking, why don't I just call one of these off-label, you know, pharmacists online and get them? I'll say, look, I'm 5'3" and 250.
I would say Matt's insurance company is spying on him, but he says on air routinely that he's eating a pint of ice cream a day.
And I mean, but the point that you raise is like exactly what so many Americans are going through right now. They're like, we've tried to lose weight for decades, can't lose weight, have, you know, issues with their heart, issues with blood pressure, all, you know, blood sugar, all of these things. My insurance company won't cover it. There's this easier to get, cheaper knockoff version. Only have to pay $150 a month. They'll send it straight to my door. That is an appealing pitch to so many Americans, and that's why we're seeing hundreds of thousands of people use these drugs.
Right. Have to imagine it's very frustrating for Dave Ricks. But just quickly here, 30 seconds left. What does this say potentially about Novo next week?
Yeah, so Novo is going to be reporting next Wednesday. Analysts questioning this morning whether we're going to see something similar happen with Novo, or if this is just sort of like a reaction to the surprise of this inventory issue, which might have just been because analysts were expecting such high Zepbound sales, which might not be as much of an issue for Novo's drugs.
Wait, we didn't get to the whole Alzheimer's. You and I were having this
we were having
debate
this robust
on Alzheimer's.
discussion.
The next set of uses.
Yes.
Right, I know, but we are up against the clock here, so we'll just have to have you back. Madison Muller,
exactly.
of course.
Anytime.
Yeah, she covers healthcare for Bloomberg News, and of course, Novo shares down in sympathy about 2.8%. Now, coming up, of course, as mentioned, we'll continue the conversation on Big Pharma next Wednesday with Novo Nordisk CEO Lars Frogard Jorgensen. Really looking forward to that conversation. Before we get there, though, immediately on this program, we'll talk about Chipotle. Stock is slumping after same-store sales disappoint. More in Social Climbers next. This is Bloomberg. All right, it's time now for Social Climbers. The company's making waves this morning. And first up, Qorvo plunging in the pre-market. The company forecast revenue and profit fell far short of estimates, and that weak guidance really highlighting fears regarding smartphone demand on reports of order cuts by Apple, which is Qorvo's biggest customer. Shares down 21%. Next up, let's talk about Chipotle, reporting third quarter sales missing expectations. The company also forecasting fewer new restaurant openings for next year than analysts were anticipating. You can see shares off about 4% before the bell rings. And finally, Super Micro Computer plunging in the pre-market. This after the company says that Ernst & Young has resigned as auditor amid a DOJ probe. EY communicated concerns about several matters relating to governance, transparency, and internal control over financial reporting in late July. Remember, they were also targeted by Hindenburg, so quite a timeline here. You can see shares down almost 31%. We'll continue to follow that one and all the latest company buzz on TRE and Go on your Bloomberg terminal. Meanwhile, let's get a quick check on futures right now ahead of the bell after some pretty hefty earnings last night. Some hefty earnings still to come. You can see shares off slightly across the indexes, a little bit more if you take a look at the small caps. 4 minutes to go until the opening bell. Stick with us. This is Bloomberg.
We are moments away from the start of trading after the first of, I think, the real Mag 7 companies reported. Google beat expectations yesterday, not lifting futures. You can see that we have red arrows, however slight they may be in terms of futures. We're down less than 0.1% on S&P futures. NASDAQ futures surprisingly down even more. Remember, AMD missed slightly. Eli Lilly, I'm going to say, shocked the market with a miss in terms of sales of its Zepbound drug, as well as Mounjaro. Now on Broadway, there's some actors ringing the bell at the New York Stock Exchange. Down at the NYMEX, Astoria, U.S. Quality Growth Kings ETF ringing the bell there. It's almost like an ad we're doing for them, but it's not, because I don't really know what they do. In terms of the markets right now, we're looking at a flat day, but it's going to be very interesting to see which way we go, Katie Greifeld, because we had a beat by Google, and AI looks strong even at AMD, though they missed on overall sales.
It says a lot about this market that's just not enough, because you take a look at what we're dealing with right now. We're flat to down, I would say, on the S&P 500, down about 0.1%. And then it gets worse from there. NASDAQ 100, which houses all of your big tech names, off about 0.2%. Of course, we have Meta after the bell, Microsoft coming up as well. So we'll see how this particular index changes. But then you cast your eyes to the small caps, also not having too hot of a day, currently off about 0.3% on the little guys. Meanwhile, Matt mentioned it, so let's go there now. Eli Lilly lowering its full-year guidance due to disappointing sales of its weight loss drug, Zepbound. A really shocking miss here, coming down to inventory, which is really surprising. This was a company that was dealing with shortages. No longer. Shares currently off about 11%, Sonali.
I've got a miss on my side as well. I'm taking a look here at Caterpillar, missed earnings estimates amid uncertainty around the U.S. election and the company's largest market, as well as growth concerns in China here. You have shares down almost 5% as the market opens. Of course, Matt, a bellwether of the economy a little bit here.
Yeah. It's the biggest, the world's largest maker of earth-moving equipment. Thank you very much. Finally, let's take a look at Alphabet shares. Of course, the parent company of Google reporting strong results on the heels of its big bets on AI, highlighting better than expected traction for its cloud computing and search businesses, taking business away from Microsoft. It's taking business away from Amazon, partly because it's hired or been hired by so many of the AI businesses that it's spawned. We're going to take a closer look at the tech sector right now in terms of earnings. For that, we go to Bloomberg's Abigail Doolittle. Good morning, Abigail.
Good morning, Matt. And before we take a look at Alphabet and what's happening there, take a look at AMD, down more than 8% this after. They put up an inline quarter, so it's interesting. They actually beat sales by about 1%. But the guide is what folks don't like. This is the worst day since July of this year. And now, very interesting, on today's tumble, this stock is close to being down on the year. It's probably up 2 to 3%, which is really pretty incredible for a stock that a lot of people think of as a high flyer. But in any case, the guidance not impressive for this current quarter, a little bit light, especially the AI component. As for Alphabet, take a look at where they beat. You were talking about the cloud. It was also the advertising and the search, really nice beats here. So Alphabet up more than 6%, the best day going all the way back to April. So investors pretty impressed there. As for what's next, well, after the bell today, we have quite a big parade of earnings, including Microsoft and Meta. And then tomorrow, we are going to have Apple and Amazon. So this Mag 7, well, this really seems to be the big 3 days here for these names, Matt. Katie.
I mean, you know, either one of us
We're all
works.
at the same desk.
That's true. Yeah. We're all sitting next to each other. Abigail Doolittle, thank you so much. Let's keep the conversation going now with Corient partner and wealth advisor Amy Kong joining us. And Amy, we're talking a lot about earnings, but we also had a lot of eco data out this morning before the bell. You think about what we learned when it came to ADP. More than double estimates coming in. You had annualized GDP still strong, a little bit soft, but then you take a look at consumer spending, for example, coming in really, really hot. When you think about the landscape here, the economic landscape, and you marry it together with what we're learning from corporate America, what's your risk tolerance right now?
Thanks for having me, and good morning. I think the economic data points that you've highlighted suggest that the economy, the U.S. economy, is still chugging along. GDP numbers were, again, in between that 2.5–3% level. It really suggests that the market remains quite resilient. And I think that is obviously a good sign. Moving forward, the more important of an implication is what the Fed will do. And I think that monetary policy will certainly be a big driver in terms of stock prices moving forward. All of this, to me, suggests that the Fed has a little bit more flexibility to continue to lower rates.
But why, Amy? I mean, with the markets at record highs wherever you look, with earnings beating expectations, with the consumer remaining strong, economic growth over 3%, why would they need to cut rates? I mean, what are they even restricting right now?
I think the environment today, where rates were at 5.25% and now at 4.75%, it remains very restrictive. And it was an environment that was used to combat inflation.
But where do you see that restriction? I hear that from a lot of people, but what is it restricting? Because it's not restricting the way I spend money. It's not restricting CapEx, right? It's not restricting stocks.
It is restrictive to an extent. I think to your point about restricting in CapEx, maybe we're not seeing that with regards to AI-related CapEx. We're certainly seeing that there is probably more of a risk of underspending in AI than overspending. But it is restrictive when you look at, for example, the real estate market, where there continues to be almost like a freeze, where buyers are on the sidelines waiting for rates to come closer to levels that we saw a couple of years ago. I think there are pockets of the economy where it is restrictive. And so, again, with regards to the positive data news on the economy, it again just suggests to me that the Fed can continue to lower rates. They're mindful that the monetary policy works in lags and in variable measures. And so they just certainly don't want to be, again, risking having rates too high for too long.
You know, it's interesting. Speaking of the CapEx spending and questions around AI, you know, not all companies are created equal. Some will spend more than others. We'll see that through the earnings reports. Want to pull up the Philadelphia Semiconductor Index at the moment, because you are not only seeing a decline on the heels of those AMD earnings, among other news, you're also seeing every single stock in that sector right now in the red today. How does this really kind of kick us off into this part of earnings season, where we're starting to get a better picture of what that CapEx spend really looks like, and to Matt's point, whether it is getting more restrictive or not?
Yeah, I appreciate that question. And I think in general, when we're looking at the 20, 30% of the companies having reported already, the results from the last quarter were fine. I think it's really the expectation going forward that's causing some of these stocks to pare back a bit. And this is certainly a risk that we're seeing in the marketplace where, the S&P 500 is trading at a forward multiple of close to 21 times at this moment. And so in general, I think your question is really stemming on, what should we expect going forward? I think the AI spend is likely to continue, but I do believe that expectations have gotten ahead of itself. And this is where, again, I wouldn't be surprised if the markets take a little bit of a breather again because of some of these corporate announcements suggesting, again, guidance coming down just a tad.
And Amy, before we let you go, just quickly here, I want to talk about the election. We are 6 days away, and you have the sell-side notes coming out fast and furious. You had Citi out today saying that in the event of a rally in a Trump win and a red sweep, that's something that you should fade. I'm curious about your positioning, how you're feeling heading into this election, given all the volatility, all the building of this so-called Trump trade that we've seen.
Yeah, absolutely. This is obviously a very sensitive time for investors, for Americans in general. From my perspective, and purely really from an investment standpoint, I would look at the elections from two lenses. The short term is absolutely there will be some bumps along the way. Headlines will drive the market one way or another. But really on a longer run, and I'm looking back at data going back to the 1950s, quite frankly, the returns of the stock market when there is a presidential election versus when there hasn't been has been comparable. And so that just tells me that the market over the long run should be able to offset some of the challenges that we're seeing in the election season. And while there could be some offsets, meaning capital tax, corporate tax, could go higher, et cetera. I think ultimately companies have been very good with using their balance sheet to innovate, to drive earnings higher, which again has been more than an offset to some of these macro challenges. And so I would certainly not be making major investment decisions based on the election alone, but certainly would look at companies that can continue, to benefit from the AI trend, from the idea that rates are moving lower, from the idea that the economic data points, while strong now, could moderate. I would certainly look for those trends when making decisions in client portfolios.
Amy, we thank you so very much for your time. Of course, that is Corient's Amy Kong. Now we're going to check back in and shares of Reddit because you do actually have this stock tripling since its IPO price just back in March. It's now trading at $110. And of course, Reddit just beating on the earnings front, capturing that AI story, capturing that advertising spend.
They're the corpus.
They're the corpus.
Yeah, and it was their first profit, and that was a surprise in and of itself. So interesting, though, that it's prompting such a big reaction. That's all good news, but geez Louise.
And you have to wonder if it's good for other IPO stocks. Other side of the story, Supermicro, down even more than it was before, down more than 30%. Their auditor is stepping back at this point after that report about the DOJ also taking a look at what's going on there as well. We will see how the story goes.
And a short?
And a short.
I know. So it's interesting. You think about all the heat that the short selling community has taken.
Hindenburg put out a report.
Exactly.
If Hindenburg puts out a report on your company and then your auditor quits,
it doesn't look great. Well, then the DOJ gets involved and then your auditor quits. You add it all together. It's not super good.
Despite all that, Hindenburg already made money, honestly, because they were up almost 200% halfway through the year. Now they're only up 15%.
I mean, don't they usually close those shorts out like an hour after they publish?
That's what I've been
Some
asking
of the
as well.
Allegations.
Anyways, coming up, a conversation. We're going to go over to FII, the CEO of Riyadh Air, from the Future Investment Initiative over in Saudi Arabia. We're going to bring you that conversation next. This is Bloomberg. And Saudi Arabia's new carrier, Riyadh Air, just announced that it's ordering 60 A321 jets from Airbus. Bloomberg Horizons anchor Germana Bersecci is with us with the CEO from the Future Investment Initiative Conference in Saudi Arabia. Germana.
That's right, guys. Thank you so much. Tony Douglas, the CEO of Riyadh Air, is joining me right now. Some breaking news with this announcement. You will be purchasing 60 of the A321neo aircraft. And, of course, those are manufactured by Airbus. This is coming as a bit of a surprise because many people had assumed that you were going to go after the Boeing 737 Dreamliners. What happened?
This is Riyadh Air, and we're absolutely delighted that here at FII today we've just announced 60 A321neo family aircraft, and we'll be taking delivery in the second half of 2026, and that takes our committed orders to date up to 132 aircraft. So special day for us, but it was a doubly special day because we've also announced our version 1.0 of our digital app, and this is the first for commercial aviation. It's got more in common with Uber, Amazon, Noon.com, so we're super excited. We've had a great day.
Yeah, big announcements on your side, but also probably not a great day for Boeing. This comes as a bit of a snub to them. How did management react to your decision to go with the Airbus narrowjets?
Well, I think most airlines like to have a balance between both of the big manufacturers. We've already placed an order for 72 787 Dreamliners. So for us, the right aircraft in the narrow-body space was the A321neo. It's an incredible aircraft from an environmental performance, from an overall cost efficiency standpoint, but for us, most importantly, guest experience. So, special moment in our time.
Can I just ask you, though, whether some of the factors that have been pulling back at Boeing over the last couple of months were factored into your decision-making, talking about the strikes and several incidents that have happened? Is that a factor to your decision not to buy the Boeing jets today?
So it's not been a factor. This is a commercial campaign. It's obviously around availability. It's about pricing. But most importantly, it's about performance. And for us, the performance of the 321neo family is exceptional because there is a regular 321, there is a long-range variant, and there's an extra long-range variant. So that gives us the flexibility in terms of how we configure to the missions that we want to operate. And I think most modern airlines are of the view that this is an exceptional platform.
Yeah. Could there be more narrow-body jets ordered from Boeing in the future, or is this it for now?
So we're going to move on to a third campaign. So obviously the narrow-body order that we've announced today, we're absolutely delighted by, but we're very soon going to move on to an extra wide-body campaign. So more to look forward to from a Riyadh Air standpoint as we build up to going live next year.
Yeah, and indeed, are you concerned about the deliveries of some of these jets? Because you also have the wide-body jets and they're set to be delivered. Are you concerned about some of the delays with those deliveries?
So the aviation manufacturing sector, everybody sees the challenges that are there at the moment within the supply chain. And, you know, we're very focused working with both Boeing and now obviously Airbus. And they understand that we're a start-up. We don't have a plan B. We're not like a legacy airline where existing leases we could extend or we can play around with the network, which of course neither exist. So both of these manufacturers we're working very close with.
Can I just ask you one last question about Boeing, because they have been set by so many challenges. What do you think is needed to right the ship there?
So look, I think Boeing is an incredible organisation, over 100 years old. The world needs a strong Boeing, the USA needs a strong Boeing, the travelling public needs a strong Boeing, and of course so does commercial aviation. They will come good. They're having a real tough time at the moment. They'll go back to basics, become engineering-led, and they'll get strong again.
So let's talk about the actual launch of the airline. You hinted at some point next year. Can you give us a little bit more color as to when exactly it's going to be operational?
So I'm hoping when you and I are sat maybe here at FII next year.
Well, hopefully we'll speak before then.
You've been sitting in seat 1A on the way here, so we're super excited.
Okay, so Q4. I'm going to say Q4 next year.
Into next year.
And then how do you see it working out with Saudi Airline? You've got obviously Riyadh Air, which is a new entrant to the Saudi airline market. How do you see the coordination with Saudi Airline, which already exists?
So we work very closely with Saudi. Obviously, we'll have 2 international carriers of the kingdom, and over time, as we scale up, Saudi will transition to hub out of Jeddah, which has always been their hub. And obviously, that's conditional upon us getting a fleet that gives us connectivity to the moment we're underserved to. So you can't fly directly today from Riyadh to Tokyo, to Shanghai, to Sydney, to Seoul, and that's totally unacceptable. The market's there, the demand's there. As soon as we get these deliveries, we'll make sure we put an incredible product on to the travelling public.
And just final question for you on how easy or how challenging has it been to attract the right talent and the right personnel for the launch when it eventually happens?
So we've had a very pleasant surprise. On our website, Riyadh.com, there is a careers page. It allows pilots, cabin crew, engineers, all manner of different skills to apply. Up to now, in 18 months, we've had 1.4 million applicants, 143 different nationalities, and of course the question is why. And the only way I can actually answer my question why is because the brand is Riyadh, it's a startup, and what it stands for is energetic, it's vibrant, and it's digital.
Well, there you go. Tony, thank you very much for speaking with us today. We really appreciate it. That was Tony Douglas, the CEO of Riyadh Air. Of course, not just one, but two big announcements from the airline today. I'll toss it back to you.
All right, Jumana, thanks very much. And thanks also to Tony there of Riyadh Air. Coming up on this program, BlackRock is in advanced talks to make moves into the world of private credit. Probably not a shock, but you'll want to know the details, and we'll bring them to you in our Wall Street Beat next. This is Bloomberg.
Time now for the Wall Street Beat. Today, we're looking at BlackRock. The world's largest asset manager is in advanced talks with private credit firm HPS Investment Partners for a potential acquisition. BlackRock looking to compete in the booming industry of private credit. Guys, this is a long awaited deal because we have been chasing across the entire year a potential IPO for HPS. HPS spun out of JP Morgan. Scott Kapnick is kind of a legend. He was a creator, really, of this industry. And you got down this road where they started to have acquisition talks with BlackRock being kind of the king of the castle.
Right. Well, it makes sense that BlackRock would go after them. You think about this big push that BlackRock has been making into private assets. Remember, just a couple of weeks ago, it completed finally its acquisition of Global Infrastructure Partners. I mean, you add it up together, BlackRock is going to have hundreds of millions of dollars in private assets just through these acquisitions alone.
It's interesting, Matt, the acquisitions that they've made have already been worth more than $15 billion this year alone. So this would add another $10 billion to that sum. It's just incredible.
Chump change, though, right? I mean, it adds $100 billion in assets.
It adds $100 billion in assets and gets them into a stronghold. And Katie covers this really closely, too. This idea that if they have a private credit firm, then what can they do?
They can make a lot more money. This
and
is
ETFs.
And ETF.
And ETFs, too. But you think about even before we get to ETFs, which are probably going to be lower cost, you think about how much BlackRock makes per dollar of AUM. Their annualized fee rate is like 15 basis points. You compare that to Apollo. Apollo's annualized fee rate is 52 basis points, even though Apollo obviously has a much smaller pie of AUM. They just are able to charge a lot more on these private assets.
Is that also because they do so many ETFs? I mean, that really brings down what you make per dollar.
The margins on ETFs are very, very tough. So it makes sense that BlackRock wants to diversify here, and they're paying up to make money.
And this doesn't immediately meet the eye either, but by getting private credit here, a lot of those infrastructure deals and places they're edging into in private markets, they dovetail. It helps them add more debt capacity to deals like that.
All right. You know why 7 o'clock is when I really start to do research?
Tell me why.
That's
because at 7 o'clock every day, DataTrek's note comes out.
That's true.
And that's when I really lock and load in terms of researching for the show. We finally have Nick Colas himself on the program. He's coming up next along with Lumen's Kate Johnson and Senator Tammy Baldwin. This is Bloomberg. We are 30 minutes into the trading day. Welcome to Bloomberg Open Interest. I'm Matt Miller.
I'm Sonali Basak.
And I'm Katie Greifeld.
And coming up, plenty of earnings ahead. Microsoft and Meta take the earnings spotlight today after Alphabet showed that its AI bet is paying off.
Amid this earnings rush, investors also wading through fresh economic data. The U.S. economy expanded in the third quarter, powered by a resilient consumer.
Plus, we're live in Wisconsin with Democratic Senator Tammy Baldwin. She sits down for an exclusive interview about her tight re-election race and the Democrats' quest to retain control of the Senate. Let's get a check on these markets. Like Matt said, 30 minutes into the U.S. trading day. It's an interesting one. You wouldn't know it by looking at just the indexes. The S&P 500 pretty quiet right now, up about 0.1%. All of the action is in big tech, of course. We are in the thick of big tech earnings. We got a surprise from Alphabet, but a disappointment from AMD. And that seems to be weighing on the NASDAQ 100 right now, currently off about 0.3%. And then you take a look at the bond market. Some people have described this great bond freakout, one of those people being Nick Kolas, who we'll get to. But at least for right now, it seems to be recovering a little bit. You can see that 10-year Treasury yield's currently down about 4 basis points, Matt.
All right, we had some economic data this morning already. GDP at 2.8% in Q3, personal spending at 3.7%. Now we're getting pending home sales. Michael McKee is here, as well as Nick Kolas from DataTrek. But Mike, we're going to go to you first on this 7.4% number, really a huge beat compared to what we were looking for.
Yeah, but it's a September number, and here's the thing. We saw a big drop after the Fed cut rates in interest rates, mortgage rates, and they've since gone back up. So is this 7.4% sustainable? That's going to be a tough act to follow. So I'm not sure we're going to see that continue, but it is temporarily good news. We've had good news in all kinds of places over the last 24 hours. You know how important next week is. Nobody knows what's going to happen. I'm talking about the Fed meeting, not the election. But the Fed getting some good news today that might influence the idea of not cutting next week. We saw the ADP numbers come in at 233,000, more than twice the amount that was forecast. Now, ADP doesn't match the NFP numbers very well, but they do trend in the same direction. So does this suggest we're going to have a very strong payrolls report on Friday? A lot of people thought not, because we had hurricanes, we've got the Boeing strike. If you look under the hood in the ADP numbers, you can see that manufacturing jobs down 19,000. That could be a Boeing issue. Construction jobs, though, up 37,000. Was that because people started to rebuild after Hurricane Helene? East, South, Central U.S. lost 13,000 jobs. No surprise there. We had the hurricanes. New England, though, lost 6,000 jobs. So a viewer wrote in and said they think the insurance companies may be letting some people go as they right size, but that one didn't make a whole lot of sense. Now let's take a look at GDP, and this is the ECAN version of it. I know Matt loves ECAN. When we call up the chart, you can see exactly what happened. You are the blue. That's consumer spending. You can see how big it was, 3.7%. The yellow is business fixed investment. It's down a little bit, but still positive. We saw a big increase in machinery purchases as opposed to structures, which we had been seeing in previous months. The two negatives there are net exports and inventories. Those are smaller, and that raises the question of, do we see better news in the fourth quarter? And that could be the case, because we're not exactly sure where all those imports went. They didn't go into inventories. So they got to show up somewhere, somehow, and if they show up in inventories in the fourth quarter, that will be good for GDP. What happened, it appears, is a lot of companies tried to bring in goods because they were afraid of the port strike, and that didn't happen, so those goods are sitting somewhere.
You know, while we have you, too, I'm glad you mentioned the jobs numbers, and it's funny, a week away. I mean, I saw it Tuesday, and I felt anxious, guys. Feeling anxious again today, knowing that the Fed meeting is a week away. How does
do you do any mindfulness, like exercises
every
in the morning?
Matthew, yeah? I have to sit next to you.
Okay.
I have to be ready for the storm.
Deep breaths.
And so, you know, this is what you do with your work husbands. And so you were talking about the jobs. Let's scenario plan for a minute here. If the jobs report comes in better than expected, even with those expectations about potentially messy numbers, what does that mean? Markets are already pricing in less than one rate cut in the next meeting.
Well, it's probably going to have to be a combination of things, but if we got a 200 plus number in payrolls, then you'd certainly see Wall Street start talking about the idea of the Fed on hold next Thursday. The Fed is going to be looking at the unemployment rate, which the hurricanes should not affect and wouldn't affect many jobs in terms of the Boeing strike, because the Boeing workers aren't eligible for unemployment benefits, but the people who get laid off can be, because they're with the suppliers and Boeing doesn't need their goods. So we're going to have to parse it, but at this point, it's going to be a question of 25 baked in, or does the jobs number change that to the possibility that the Fed stays on hold?
All right, Mike McKee, we'll see you very soon, of course. NFP coming up on Friday. That is Bloomberg's Mike McKee.
Hopefully we see him before then.
Yeah, we might see him on Thursday, before Friday.
Yeah.
But he also sits near us.
It's Halloween tomorrow, so what are you going to be, Mike?
Oh, my gosh.
I'm going to be an economist.
There you go. You should be the federal deficit, because apparently that's very, very scary. And let's go there with Nick Kolas. He is founder of DataTrek Research. He has been sitting right to my left very patiently. It's great to see you in person.
Good to see you.
So let's talk about the deficit. We know it's going higher in any scenario that we get next week. This, I am talking about the election. When you think about what we've seen in Treasury yields, a lot of people have pointed to that as being a Trump trade, that basically yields are screaming higher on the long end because spending is going to increase if Donald Trump returns to office. Do you buy that argument?
There's certainly a strong correlation to history. If you look back from Election Day 2016 through year end, 10-year Treasury yields rose 57 basis points to about 2.5%. And they've risen about 55 basis points over the past couple of weeks since the Fed meeting. At the same time, you've got to remember that 10-year Treasuries yielded 4.3% in 1965, so 60 years ago, and they yielded the same rate in 2004, so 20 years ago. So I think, walk me through how the deficit informs 10-year Treasury yields, because we were at 45% at GDP in the 60s, 60%, 65% in 2004. We're at 120% now, and it's exactly the same yield all three times.
But it is also about the rate of change, right? And not just about the 10-year, but the steepening. We spoke with Neil Grossman of TKNG yesterday. Listen to what he had to say.
And I think the thing to really watch, in my perspective, is just how high interest rates can go even as the Fed cuts. To me, there's no reason why this type of yield curve is not something we may be looking at, which is a very scary outcome.
With a 7% 10-year.
Why not?
Is that, you think, a possibility if, you know, the bond vigilantes come back, if markets really finally start to care about the deficit?
Didn't they all retire?
Yeah, okay,
Well,
their sons and daughters come back, right?
It was a long time ago.
Right? If you have a problem where you're issuing more and more debt and there are not people on the other side to pick up that capacity.
Yeah, so the question is, if you're not going to buy treasuries, if the world's not going to buy treasuries, where exactly do they go? So are you going to buy German bonds? Are you going to buy the French yield curve? Are you going to buy Japan, China? Where do you go? Now, some money is going into gold, and that's fine. Some money apparently is going into crypto. That's also fine. But there's so much liquidity in the system. Where else can you go rationally? And for that, it is treasuries. I mean, a 7% treasury is a disaster scenario, of the likes of which I don't think the stock market would withstand very well. We'd be down 30, 40, 50% if we went quickly to 7%. If we go there over the next decade, not a problem. Over the next year, huge problem.
What do you think is the ceiling of what the stock market could handle to that point, if you think over the course short term the next year?
I think year-to-date highs are 4.7%. So that would be a level. I think 5%, which was a top out in 2023, would be the next level. Those are levels that very clearly the economy can withstand, because we're looking at great numbers right now. So those are okay. And I think we have to remember that both businesses and individuals locked in low mortgage rates and low financing rates in 2021 and 2020. And so there's not as much effect on the economy from higher rates as we would have thought.
I'm glad you brought up those specific numbers, too, because there was a moment here in the market where you saw yields drift higher and the market was kind of jittery. But now you see the strong economic data coming in this morning. You have the S&P just off of session highs. They like it. They like that it looks like we're not going to tip off into a recession. So how strong can the economy be before you start to get into a scenario where not too many more rate cuts matter?
Yes, it's a great question, and I think about it in terms of like I'm being in a mid-cycle economy, a mid-cycle market, which is where I think we are right now. And you know, going back to the 90s, every mid-cycle market is this constant push and pull of when's the Fed going to cut? Why do they have to cut? Where are rates going? What are valuations? And these tensions play out over years and years and years, and they're great for conversation, but they don't really they shouldn't inform people's investment process very much, because ultimately you're talking about an expanding economy, job growth. Everything is fundamentally healthy. Earnings will improve, markets will rise. So we get this push and pull, but I think we have to put it all in context.
So why does the Fed have to cut? I ask almost every single guest what these rates are restricting, because it's definitely not restricting markets, earnings, spending. Everything looks good, strong, healthy. Why not leave rates at 5?
I think they do not. Look, Chair Powell has pulled off something that even Paul Volcker couldn't do. He seems to have pulled off pushing inflation back down without creating a massive recession. The 1980 recession was the worst unemployment rate this country saw in history, back to the Great Depression or forward to the pandemic crisis. He had to create an inflation. Powell so far has not. I think he would dearly love to have his legacy be, I killed inflation without killing the economy. So far he's pulled it off, but the last couple of innings are going to be really important. And that's why rates are coming down.
Well, and a repeat comeback of inflation would be really bad.
It would, but the story is very definitely out on that. So if you think about inflation in the 70s, think about the demographics of the U.S. in the 1970s versus now. Much younger population, growing population, and heavy spending demographics don't have as much the case now. So I think the story of inflation in the 70s is different from today.
So, I mean, history will show whether or not Powell ultimately is successful. Successful up to this point, but we'll see. We have to talk a little bit more specifically about the election.
Yeah.
We're 6 days away, as we keep saying on this program. I want to talk about your blueprint for what should happen, because you have all these sell-side notes coming out talking about, you know, what to do if there's a sweep, what to do if Trump wins, if Kamala wins. Reading your notes, though, it seems like you're saying just buy large caps.
Yes. I mean, the hard thing about this election is there's a very clear Trump playbook. We know what happened in 2016. 2020 was much harder to parse because we had the pandemic crisis going on right with the election and into year end. So the market only knows a Trump trade. They don't know a Harris trade. So it's that combined with the increased gambling odds of Trump winning means we've seen the right Trump trade happen. It's been energy, it's been financials, it's been short 10 years, it's been long U.S. large caps over international. All the same things that happened in 2016 through year end are happening right now.
Can you trust the gambling markets?
No.
No.
You have to wonder that even if you get to this position where Trump were to win and you did have a red sweep, if the market has still moved so far that some of it still unwinds.
I would, if we do get that kind of sweep, then I think that'd be a surprise, and the market will continue to rip higher through year end along the same lines we've discussed so far. In the more likely scenario of a split between White House and Congress, then I think maybe half the trade is baked in. But look, even the most aggressive gambling odds are 67% for Trump. That still means there's 33% of a trade left. Because as we close the certainty to 100, those moves continue. So I'd say that's the basic trade.
Nick, we thank you so much for your time. Thank you for joining us. And Sutton, thank you for blessing our inboxes at 7 a.m. Is it that every morning?
It's like clockwork.
It's like clockwork. Nick Colas of DataTrek, we thank you so very much. Now, coming up, how will the outcome of the election impact the healthcare sector? This has been a hot sector to watch, and we're going to speak to the CEO of health payments company Anomaly Insights next. This is Bloomberg.
Now to high interest, a look at what's making headlines around the world. Israel is considering a deal to end the conflict with Hezbollah in Lebanon. The proposal would include a 60-day suspension of hostilities while mediators work on a lasting peace deal. Hezbollah says it will accept a ceasefire under suitable conditions. And Kamala Harris made her closing argument for president in Washington, D.C. last night to a crowd of over 75,000 people, calling Trump unstable. Meanwhile, in Pennsylvania, Trump tried to move past the controversy of racist remarks made at his Madison Square Garden rally. And one of the sectors potentially most impacted by the results of the election will be healthcare, with a number of pharma companies preparing for either outcome on November 5th. Joining us now is Mike Desjadon, CEO of Anomaly Insights. Anomaly uses AI to help simplify health payments. And let's talk first about drug pricing.
Sure.
This isn't an area where it seems like the White House should be able to take a win. I haven't really heard that much about it from Kamala or in the media. But have you seen a substantial move down in terms of the price we all pay for drugs? Because America has the biggest drug bills in the world.
Sure. Well, one, thank you for having me. Really excited to be here. I think, one, healthcare is so real for all of us because at the end of the day, we're all going to go to the doctor, right? No, to answer your question directly, I haven't seen a push down in the cost of drugs. In fact, I think, when you look at the drugs coming online, there's lots of them. They're quite expensive. And, we are hurtling towards this election. Tuesday's coming fast, 6 days. Obviously, all eyes are on it. Just about the only thing that the Harris campaign and the Trump campaign have talked about in agreement is the high cost of drugs. So I think, if you're looking at those costs, either way, almost no matter who wins, there is going to be action.
There's so much talk from President Biden himself, though, about insulin. He's capped insulin prices,
sure,
right? Which you need after you get diabetes. Before you get diabetes, it would be great to have some Ozempic or Wegovy. Those prices are off the hook.
Mm-hmm.
Do those things kind of balance each other out?
I can't speak to balance, but I know, GLP-1s are what everybody's talking about right now. One, because of the cost of the drugs themselves, but two, because of how many Americans, if they are kind of upbranded for obesity, could potentially be prescribed them. So we're talking about a drug regimen, thousands of dollars, that more than 60% of the country could reasonably be prescribed. And that is, if you're an employer sponsoring healthcare, if you're a state, like North Carolina kind of took it off of its rolls for payment, we're talking about billions of dollars in spend not accounted for in the system right now that, we'll have to think about, and there's going to be action there for sure.
It's interesting, your point. It's not talked about very widely. There's one person who talks about this kind of stuff a lot, Mark Cuban. And there's something that has happened in the Harris administration that really gets to the point that he's been making. Pharmacy benefit managers,
yes,
the issues in the system. Lena Khan, the FTC is actually what went after this. So you have seen a massive push by the Biden administration that a lot of people don't really even know about here.
Yep.
Do you think that this is a Democratic campaign, or is this something that also spills over into a Republican administration where you see antitrust agencies, the FTC, really going after those big companies?
Both. I mean, what's interesting for the camps that are so divergent on healthcare, places where they narrow, this is one of them. And I think the issue here more broadly, PBMs, right? Your average listener probably doesn't even know what those are, even though they affect them every single day. And I think what Mark Cuban and his kind of new PBM is after is transparency. And I think what so many folks, whether they be kind of average everyday Americans like us, or whether they be folks on Capitol Hill, or whether they're folks in the administration, nobody has any idea how these things get priced. Nobody has really any idea when you go to a doctor what's going to happen with your insurance company. Are they going to pay it? Are they not? I had a baby more than a year ago, my wife and I's first. And, you're excited to get the baby home. And then a month later, you start getting bills, right? Some paid, some random ones denied. And, whether it's the insurance arm or whether it's, pharmacy benefit managers covering the drugs, you mentioned Lena Khan, most of these kind of companies that we interact with without knowing it are all vertically integrated, right? So, the 3 largest PBMs in the country are owned by the 3 largest insurers in the country.
Thanks to
and
mergers.
None of that is transparent. So Lena Khan has, preferred to prevent mergers. What might happen with mergers and vertical integrations that already exist is anybody's guess. Mm-hmm. You started to see some action with maybe looking at a Google, for example, but there are a lot of players in the healthcare industry that are similarly vertically integrated and similarly dominant, and that might be something interesting to look at as well.
Well, let's talk about how your company fits in. Of course, Anomaly Insights, you're a health payments company, and in this web that you just described, I mean, how do you fit into that?
Sure. So we are looking to simplify health payment, and we do it on behalf of the health systems. So I mentioned earlier kind of my wife and I's experience of having had a baby and getting various denials. We've all experienced it in one way, shape, or form. And when you think about how insurance in this country is essentially kind of delivered, right? In healthcare, unlike anywhere else, insurance is more like cash payment. We use insurance for everything. So there have to be rules that govern everything, right? So if I kind of go in for an encounter, somebody is going to have to determine, what is going to be paid for, and that is incredibly opaque. So we put our technology in place to basically pierce the veil of the black box that lives kind of on the insurer's side and how they adjudicate these bills, which is a massive data challenge. And we give that intelligence to healthcare insurers so they can inform patients, for example, on, hey, you have to get this procedure. They're not going to pay for it. Here's what this might cost you. Or they can kind of provide better bills kind of going out the first time and save, 20 some odd $billion in kind of fighting insurance companies. So that's what we do. And, what it all boils down to for this conversation is just transparency. really, nobody knows. And in this country, we spend $500 billion trying to figure out the answers to those questions.
It is infuriating.
Yeah.
So if I can bring you to the doctor with me next time, it would be great if you would just come along.
There's smarter people at my company than me that can help you more
send
than
one
I
of
could.
those or your AI. Mike, great to have you on set. Love to talk to you again. Mike Desjadon there, coming to us from Anomaly Insights. Still ahead, we take a look at companies making the most buzz today. Social climbers is next. This is Bloomberg.
All right, it's time now for Social Climbers, the companies making waves this morning. And first up, Boeing and union leaders representing 33,000 striking workers held fruitful talks yesterday with the help of the Biden administration's top labor official. Boeing and the union, of course, trying to end that 7-week strike. Next up, Caterpillar missed profit expectations, also warned that full-year sales and revenue will be slightly lower than expected, taking shares down about 2%. And finally, Shake Shack, some good news. Their quarterly sales beat Wall Street estimates. The burger chain also said that a new workforce model had raised its labor sales per hour to the highest level since 2019. You can see shares currently higher by about 14%. Meanwhile, let's take a quick check on markets here. We're about an hour into the cash trade. You can see the S&P 500 at session highs. Can't yet say the same for the NASDAQ 100, still down on the day. The bond market rallying a little bit here when you take a look at the 10-year yield. Now coming up, Kate Johnson. She is Lumen Technologies CEO. She delivers another deal for her company, this time with AWS. She joins us to deliver the details next. This is Bloomberg. Well, Lumen Technologies out with its latest partnership. After teaming up with Microsoft and Meta earlier this year, they're now partnering with Amazon Web Services. This deal will allow AWS to use Lumen's next-generation fiber network to support its infrastructure, and it will allow AWS customers to build AI applications across the platform. For more on this deal, I am pleased to say we're joined now by Kate Johnson. She is the president and CEO of Lumen Technologies. Kate, it's great to have you with us. And the big question I have is that these fiber routes that you're building for Amazon, will Amazon ultimately buy them once you complete construction, or will they be leasing them from Lumen?
These are long-term leases. It's critical infrastructure that we provide for these companies for the next several decades. That's important because we own the network. We basically invest in the critical infrastructure to continuously improve it on their behalf.
So what does that look like at the end of the road here? Is there a competition that ends up forming between you and the client at the end of the day if it is a leasing business instead of an owned to rent, if you will?
I think the way we should think about this is these technology companies are recognizing that the network of yesterday doesn't serve what they need to do in the AI economy. These networks aren't big enough, they're not fast enough, they're not secure enough, and Lumen is fixing all of that. We're building out, expanding the internet at large effectively, building new routes, and building a digital platform on top of our infrastructure to ensure seamless customer experiences. We're providing the biggest technology companies in the world the opportunity to focus on what they do best while providing pathways for high bandwidth, low latency, highly secure paths for customers to transfer AI workloads.
Kate, I'm the only person at this desk old enough to remember when people laid fiber for the internet. And it was very expensive, but we were super psyched about it at the time. They racked up a lot of debt, and eventually some of them had difficulty with their stock prices later on. How much are you paying per mile for this fiber, and do you think this time it's going to be different for Lumen?
So what's happening right now is we're taking a network that was built a couple of decades ago and probably underutilized, and we're bringing it and capitalizing on an opportunity of explosive growth in data centers, which need connectivity. AI needs data, data needs data centers need connectivity. And we are here for that moment. And we have two basic growth vectors that we're leaning into. The first is building out the AI economy backbone, right? That's us. That's the critical infrastructure for these biggest technology companies and social platforms on the planet. The second growth vector for us is selling digital services, high value, great, seamless, quick, effortless customer experiences that customers have always dreamed of for networking, but have never gotten. And today, more than ever, it's important to them because to operate with the agility and the efficiency in the AI economy, they simply have to have that digital platform. Two growth vectors on top of a world-class network.
And Kate, I'd love to talk about how these partnerships, what they mean basically for Lumen's balance sheet. Because if I go to the DDIS function on the Bloomberg terminal, I see that Lumen has about $20 billion in debt. So when you take a look at these partnerships, how should they help you service that debt in the coming years?
So the first thing you should see is in our debt profile, we did a massive restructuring last year to give us plenty of time to run our turnaround. Right? What these deals do is they inject cash into the company to allow us to self-fund that turnaround. So it's a great moment for us. We have a very, very bright future.
So when you think about the debt load that Katie was talking about as well, what are some of the options that you have? Would you consider more asset sales to pay some of that down?
Hey, look, we're always going to look at delivering a maximum return to our shareholders. So whatever form that comes in. But right now, what we have that we haven't had in the past are two growth vectors that I just talked about. One, continuing to build out this backbone for the biggest technology companies on the planet. And two, in the second phase, and this is really, really important, enterprises are coming to us and they're recognizing the very same thing that the big hyperscalers have already recognized. They're saying our networks aren't sufficient to serve us in the AI economy. We simply need more. So we're seeing a major uptick in demand for some of these higher bandwidth services, which is giving us an opportunity to put the company on a growth path, which is super exciting.
Seems like a huge moneymaker, Kate, if you can use the asset right. So I want to know specifically about the fiber that you lay for Amazon. They're going to lease it. You said long term. I assume that means, like a decade or decades. Can you sign up other customers to use the same fiber? And are you able to sell them higher margin digital services as well?
That's exactly the vision, right? That's exactly on point. The three phases to this AI story from a networking perspective. The first, we're right in the middle of it. We've inked these big deals. We've got more on the horizon. We're super excited about our progress here. Nobody else is signing up these great customers. And these are long-term, multi-decade deals where they're effectively leasing this critical infrastructure and providing annuity streams for us, and that's growth vector one. Growth vector two is really about enterprises, exactly the way you just described it, saying, hey, I got to be able to be agile and nimble. I want to be able to consume these network services in a way that I've come to expect in the digital age, which is quick, secure, and effortless. And the only communications company on the planet who's building as a service model or cloudifying telco is Lumen. Right? And so there's a major opportunity for us to lean into both of those growth vectors. And then I think there's a third part of the story, which is on the horizon. Remember, we're a network company, so we love massive amounts of data. Hyperscalers building out to train their models, enterprises building to use those models. And then we are seeing an opportunity for when AI talks to AI, a massive increase in the amount of data required and the pathways to support it.
And Kate, of course, you've been on a partnership spree over at Lumen, three big partnerships in the last several months. You said in August that you had secured $5 billion in new business related to the AI boom and that you were in active discussions with customers to secure an additional $7 billion in sales. Of course, we've seen this AWS partnership. We've seen Meta since then. Should we be expecting anything else, or are we at $7 billion already?
Hey, so I can talk more about our progress at our earnings call next week. Right now, you should know, I think the message is we're just getting started. And I think that these deals are indicative of the validation of the opportunity that we've been talking about, and we're capitalizing on it, and we're super excited by our progress.
All right, Kate, really enjoyed speaking with you. Hope to speak to you again soon, perhaps soon after earnings. That, of course, is Kate Johnson. She is the CEO of Lumen Technologies. Meanwhile, let's get a check on these markets right now. We'll do that with Abigail Doolittle.
So we have the major averages, Katie, flipping here just a little bit. The S&P 500, which had been down just a bit, now higher. The NASDAQ 100 still just slightly lower. Take a look at the big decline, though, for the stocks, that chip index. It's not just Supermicrocomputer, which we'll be taking a look at in a moment, or AMD on the forecast that some investors think is weak. Corvo, the Apple supplier, right now down 25%, so really weighing. Now, when we put these indexes together, today it looks like tech is down, but that's opposite of what's been happening more recently. In the Bloomberg terminal, we will see that the S&P 500 equal weight index, so more toward the value and equal weighting all of the components, all of the sectors in blue. It over the last 2 months, basically since the middle of September, it's up just about 2%, whereas you have big tech, the NASDAQ 100, really outperforming up 6.2%. As for some of the individual movers, we do have some outsized ones on the day. Reddit is absolutely soaring right now, up 40%, a record high. They put up a strong sales forecast. There is a 7.2% short interest on this stock, so some of the bears probably getting squeezed out. Alphabet, the best day since April. The view is really pretty strong. In addition, great quarter. They beat sales, earnings. Search strong along with the cloud. To the downside, Eli Lilly, at one point, the worst day since 2000. Right now, the worst day since 2008. The forecast for their weight loss drug is Zepbound, very disappointing. And finally, but not least, Supermicrocomputer down 29%. This stock really just cannot get a break, or the company, I should say. Ernst & Young, their auditor, stepping away. And this, of course, Sonali, after Hindenburg put out that short interest around accounting irregularities back in August. And it seems like this story just keeps going. At one point, the stock had been up, maybe I think it was more than 1,000% in a short period of time. Now, on the year, down 70%.
Abby, we thank you so much for taking a look at those movers. Matt, if you could believe it, I'm looking at what it would take for Reddit to quadruple at this point. You are at 100.
From the IPO, you mean?
From the IPO, yeah. You're at $113 a share right now. They only need to get to 136. We are inching slowly in that direction. Anyways, coming up, we're just a few days until the U.S. election. You might have been paying attention to the clock. We are live from Wisconsin with one of the candidates seeking her third term in Congress. That is Democratic Senator Tammy Baldwin. This is Bloomberg. And it's only 6 days to the U.S. election, and candidates are making their final pitch. We're going to go to the battleground state of Wisconsin, where Bloomberg's David Gura is standing by with an exclusive interview.
Well, greeting to our audience on radio and TV worldwide. I'm here with Senator Tammy Baldwin of Wisconsin. We were in Green Bay, Wisconsin. You call this state the battleground state. Yes, you are not hedging on this. You say your race is 50-50. The presidential race here is 50-50. One of the reasons I wanted to come here was see if the polling sort of is meted out on the ground. How close is it, and what's your path to victory as you see it?
Yeah, so we've been a battleground state for some years now. If you think of 2016, Donald Trump won the state by 0.7%. And it was the tipping point state for him to win the presidency. But 4 years later, Joe Biden won Wisconsin by 0.6%. That's like 1 or 2 votes per precinct in our state. And this looks like it's going that same path. So now everything comes down to turnout. Which side really gets their voters out, does the hard work for those who are still undecided, there's a handful still, and helps them get to the polls and reminds them that their vote is their power.
I should say we're sitting on your campaign bus, and you're on this multi-day bus. On you, you acknowledge that the balance of the Senate sort of hangs on this seat. How do you navigate that, and does it push you maybe more moderate as a result, as you kind of think of just the role or the importance of this seat to Democrats?
You know, I think really the choices here are really between somebody, myself, who's been fighting for the working people of this state, and a candidate who is much more interested in multimillionaires and big corporations. And that couldn't be on clearer display when you look at the fact that he supports a $4 trillion tax cut that would disproportionately impact and benefit multimillionaires like himself and big corporations, whereas I'm trying to get working people tax cuts, the child tax credit, the deduction for those who are starting up a business, deductions to make home ownership more available to first-time home buyers. Those are the things that I want to see through. But that contrast couldn't be on sharper display between myself and Eric Hovde. And then, how would he pay for that $4 trillion tax cut? He proposes a plan that would reset federal spending to levels from the last decade. And if we did that, it would mean cuts to Social Security, about $6,000 a year for the average beneficiary. I mean, we couldn't be more different on the economy and fighting for working people. I think Wisconsinites want somebody who is working every day for them.
On the economy, we look at our poll, the Bloomberg Morning Consult poll, we look at other polls. The economy is the #1 issue in each and every one of them. Is that true as you talk to voters here in this state? Is that the thing that they want to hear about from you, that they indeed care the most about?
It is certainly top of mind for voters who haven't seen any relief from the inflationary prices that were caused by the pandemic and the screwed up supply chains. Those supply chains have been addressed, but the corporations haven't buy at the grocery store every week, or while inflation has gone up over 3 years by 14%, corporate profits at that same time have gone up 75%. My voters who are really squeezed by these prices want a cop on the beat helping them. And so I support legislation that would empower the Federal Trade Commission to go after corporate price gouging, investigate it, try to have a champion for consumers on the job.
We were in Sheboygan yesterday, and after you gave your speech, I talked to somebody who's supporting you, and I said, tell me about this place, and he began to point out places where there were companies who had been there or had reduced their footprints, and Kohler is chief among them. And he sort of wondered what would bring them back. This is sort of stock and trade rhetoric for your opponent, for former President Trump as well. He's telling voters that these companies will come back. Are there mechanisms by which you can do that, or is it time for voters to sort of recalibrate their expectations for what a manufacturing renaissance would look like in this country?
Yeah. So first, Kohler is still an iconic business, yes, very close by to Sheboygan. They have, I believe, sold one of their divisions, but they're still making sinks, faucets, shower heads right in that area of the state, and they have a very strong workforce. But I want to answer your question, because I consider myself one of the Buy America champion of the United States Senate. So when we're passing big pieces of legislation, I'm like, we got to make sure there's Buy America rules attached to this. And I was successful in getting permanent Buy America rules attached to the infrastructure bill, to the Chips and Science Act, to the Inflation Reduction Act. That is bringing jobs back to Wisconsin right now and keeping some jobs here that might otherwise have left. Give you an example. In Kenosha County, there's a company called Sanmina that makes circuitry type of things. We needed a specific type of circuitry for our broadband build-out. You know, the infrastructure bill pledges to get every residence and every business hooked up to high-speed internet. And so our Commerce Secretary, because of the Buy America rules, was able to go overseas, engage a CEO of a company and say, I need your product. And he said, go ahead and buy it. Well, there's this problem. Buy America rules. It means that you have to produce them in the U.S. Well, they found a compatible company, Sanmina in Kenosha, 200 new jobs right now being created because of Buy America rules. I think that's one very powerful tool to bring jobs back and to actually get a leadership role in some industries that we have previously given up and given away to other countries.
I want to ask you about healthcare, which of course complements the economy. You've talked a lot about the Dobbs decision. Mike Johnson, the Speaker of the House, promised massive reforms to Obamacare at a speech earlier this week. How critical is that an issue for you? How much is that resonating with voters, sort of the viability of the Affordable Care Act of Obamacare?
Yeah, my opponent, Eric Hovde, has said he wants to repeal it in its entirety. I helped write it when I was in the House of Representatives. The achievement of getting health insurance companies to cover people with pre-existing conditions was life-altering for millions of Americans. Millions of Americans have insurance today because the companies can no longer say no and cherry-pick their customers, right? And I wrote the provision that allows young people to stay on their parents' health insurance till they turn 26. That's another game changer for folks right out of high school whose first job probably isn't going to offer full health insurance. And so we have to strengthen and build upon the Affordable Care Act, but we cannot go through another period of time where Republicans are threatening to repeal it and people are feeling the lack of certainty about their future, their ability to have the basic security that health insurance provides.
We have 1 minute left. Vice President Harris delivered a big speech yesterday, her closing argument, and she acknowledged the fact that there are still voters who don't know her, who feel like they don't know her, what she stands for. Could you just give us some anecdote, some sense of who she is that might help those voters understand how she operates, what she's like as somebody who worked with her so closely in the Senate and now is with her as vice president?
Yeah, well, I just look at her resume. She was the top prosecutor for the largest state in the country and held perpetrators to account. She, on the Judiciary Committee, was masterful at holding power to account. I think that that's one thing that you need to know about Kamala Harris, is that's been her history. And I think she's going to be a really, really strong president.
On the bus with Senator Tammy Baldwin in Green Bay, Wisconsin. Back to you.
All right, David, thanks very much. David Gura there with the Democratic Senator Tammy Baldwin of Wisconsin. Coming up, earnings season continues with some of the biggest tech names still on deck. We'll discuss what to expect next. This is Bloomberg.
Welcome back to Bloomberg Open Interest. Taking a look at markets right now. An interesting trade, of course, the S&P 500 up about 0.1%. If you take a look at what actually is interesting, you have Alphabet. That is your biggest gainer on a points basis, currently higher by about 5%. On the losing side, though, NVIDIA is your biggest decliner on a points basis, down about 1.7%, maybe in sympathy with AMD. Eli Lilly is your second biggest decliner. It's down about 6.7%, which is a lot, but it's not as bad as it was, you guys. Of course, we were talking about Lilly shares down about 11-12% earlier in the session. That surprising miss when it comes to their GLP-1 sales definitely took the street and traders by surprise. And then you take a look at what's ahead. Microsoft, Meta, after the bell today. What are you keeping an eye on?
I'm really looking forward to see how much they are going to spend, continue to spend on AI. Usually when CapEx jumps, that's a concern for investors. I think right now people want to see more CapEx.
Yeah.
So we're looking at maybe a 70% jump for Meta to $11 billion. Microsoft expected to see capital expenditure jump 45% to $14.6 billion.
NVIDIA in a big way.
All of it matters for NVIDIA.
Well, that's what I was going to talk about. Since you saw those AMD earnings and the weakness in the Philadelphia Semiconductor Index, it's funny, you're not seeing that same trade in the Mag 7. You have to wonder if there's some other dynamics going on there. Yes, the NASDAQ is down today, but you have Supermicro as part of that as well. Right. Alphabet is still gaining to the biggest degree since April. So significant gains you're seeing on the heels of these beats. You can see if that'll continue if you see that spend keep up.
I just am so fascinated by the fact that Facebook has spent like double-digit billions a year for years on these glasses, right? And there's got to be something more than the Ray-Bans.
And the metaverse, but we don't talk about that.
Are we all going to end up wearing that stuff?
I don't know. Ask Mandeep Singh. We'll do that tomorrow, probably. And also tomorrow on Open Interest, we'll speak to the CEO of Hartford, Chris Swift. He joins us in the C-suite. This is Bloomberg.